Are these the four horsemen of pumping Bitcoin? And can any person in cryptosphere really save Bitcoin from falling down 30k? Does cryptocurrency prices truly fall for what other influencers say? Today we would like to assess what happened behind Bitcoin jump and debunk some myths regarding this. So welcome to another episode of Blockrevision. My name is Rafał and let's begin our episode. Okay, firstly let's jump to market movers section and we'll talk a bit about the economic calendar that is accessible on Trading Economics, and we can find on Friday, as we have ended that day of the previous week, on market manufacturing PMI flash from US that turned out to be at a 63.1 level. That's the level unseen before throughout the period of over 10 years. So right now we can find that also this gauge is beating market forecasts of 61.8, and we are skyrocketing to the all-time highs. So this gauge has surged due to new orders growth that accelerated and also existing customers ramped up their spending. We can find also that foreign clients are interested in more and more products, so that's why the production rose, and obviously we can find that it can also bring us some anxious outlook on what the inflation may come. Right now we are in this period of time where stronger demand for inputs globally and a scarcity of materials led to fastest rise in cost burdens on record. So it's definitely not positive outlook for the US prices of goods. Right now let's jump to the Monday, and on Monday we can see there is a important gauge of new home sales month over month for June, and the forecast of this is to be set at 1.4%. So it means this chart of US new home sales is about to stabilize, but how it will finally turn out we'll find out today before the noon. And on Wednesday, July of 28th, we have a Fed interest rate decision that is a very important statement. That is a primary tool the panel uses to communicate with investors about policy, monetary policy, and this one is expected to be the same as it was before, so 0.25% is expected right now, because the Fed didn't really mention even hike of interest rates right now, so this event shouldn't bring any spectacular changes. Meanwhile, on Thursday, all of investors will have their eyes turned to the GDP growth rate quarter over quarter as for the second quarter of 2021, and as we can see, the previous metrics were getting 6.4 level, and previous one got the 4 and 3% expansion. So right now the forecast is set higher at as much as 8.5% in the second quarter as the recovery continues, although rising prices pressures are already waiting on some sectors. Oh, and it looks like I've omitted one of our important gauges for this week. This is from Canada. Inflation rate year over year and month over month for June is likely to show consumer price growth at a decade high. So look at this one. and also preliminary estimate for second quarter GDP that is also due. And getting back to Thursday, the very important for Fed gauge is initial jobless claims that were forecast right now at the level of 370, so it's lower than the previous one. And the Fed is expecting this one to get back to the pre-pandemic levels. And to be exact, initial jobless claims measures the number of people who filed for unemployment insurance for the time of the previous week. And the last but not least of this upcoming week is the data from European zone. Core inflation rate year over year is expected to be higher than it was before, but I expect then if it would be a lower one, it will be stronger for the euro currency. Otherwise, it will be bearish. So we'll find out how finally it will figure out on Friday. Now let's get to the economy view and jumping to the news in Bloomberg. Janet Yellen warns of default risk by October without debt limit hike. So Secretary said that the Treasury Department will begin special steps next week, it means this week, to avoid breaching the US debt limit as a 2-year suspension of the ceiling ends. She also added that there are scenarios that the Treasury could exhaust its special measures and run out of cash soon after Congress returns from recess. So, just to sum up, the stock of assets purchased under QE is already enormous. It stands at 30% of gross domestic product in the US, and when it comes to European zone, it's when it comes to Britain, it's about 40%. So, but doesn't mean it's enough. It doesn't seem so. They definitely go increase the spending just after this article said, and probably will go towards the next and the next of the next year. With this summertime slowly but surely coming to an end, we would like to hang on for a while and wonder what the second half of this year for the US stock market might be. So we can find a comparison of S&P 500 value index that is on black and a growth index that is on red. We can find that the black one, value, is lagging behind the growth index. It's probably because some concerns lingering about inflation, and obviously the recent one, a threat to economic growth from the rising delta of virus variant. And right now we can find that when it comes to value stocks, obviously this environment, this uncertainty may weigh on some assets, while growth are outperforming due to right now buying rumors about good outcome of Apple and Tesla upcoming earnings metrics. And right now, the growth stocks still have a room to grow. Value has stopped for a while. However, we are not find any specific like publications regarding of what a Delta variant of virus may of how seriousness of this Delta variant of virus may impact the US economy. So that's how just better stay cautious regarding any predictions of what may happen, but no matter whether it's value stocks or growth stocks, this year is about to be such as this glass half full and half empty context, just revolving around monetary and fiscal support and probably good earnings. Concerned about inflation and where does it really come from? Let's look at this scorecard of market food vulnerability. So we can find here that some of the economies are really fragile and sensitive to the environmental factors. No other industry is more at the mercy of sun, rain, and heat than agriculture. This is industry where changes in the weather can upend farmers' fortunes overnight. Right now we can see that among those economics is Brazil. Brazil is the world's biggest shipper of sugar and orange juice, and the key producer of corn and soybeans. So just to add up, it accounts for about 40% of the world's harvest of for Arabica coffee, and right now we can find that it also supplies such restaurant chains as Starbucks and so on. So right now, due to difficult environmental issues, we can find that the prices of coffee futures has broken out to nearly $225. We can find that this forecast turn back to the supply chains disruptions and also to the difficult environmental factors. So we can find that when it comes to Brazil again, there is no other country in the world that has kind of influence on the world market conditions. So any issues regarding Brazil may impact other areas as well. So right now inflation is not going to end, I think, anytime soon. So at the end, just not only the inflation is coming from the ongoing global semiconductor shortage that we've been covering in the past, but also from rising raw material prices and obviously from the market food vulnerabilities. And let's get to the third topic of today, that is indexes outlook. So regarding this one, we have an interesting chart that shows retail investors' daily net purchases of US equities in billions dollars. So we can find that on that day of a dip on Dow Jones Industries Index, we had an enormous buying volumes made by retail investors. So everyone almost is certainly ensured that the stocks are going higher, and every dip is a possibility to buy, even just after getting lower, going lower past this previous confirmed dip. Retail investors weren't scared and decided to make this chart thrive and send it higher. Thanks to them, we have survived through this head and shoulder pattern and denied it. Thanks to this, there is still forecast of make this chart to go higher. So I don't find anytime soon this trend to be turned about, just because in the air we have a Delta variant of virus, so it may bring another stimulus from the US government, and obviously the inflationary pressures that also strengthens the investing behavior of retail traders. So this chart is looking still strong despite some dips right here, but this buying dip mental may just persist a little bit longer. Some bears claim that deep buying bulls build momentum for next Minsky moment. So may it bring another trend, the very sharp trend reversal? Probably in the future, but When may it happen, nobody really knows. Just bear in mind that while margin debt provides the fuel to support the bullish speculation, it's also the accelerant for the reversal when it occurs. So the leverage of retail traders may also bring the sell-off very rapid and very sharp. Now let's look at the crypto outlook, and we have a interesting chart of Bitcoin. BTC USD right now have gone through this short squeeze. Short squeeze is a situation where short sellers had to run away to cover the short positions when the price is going upwards. So right now we can find that low volatility condition has resolved on the upside, and 42.5k is a level that continues to be the hurdle. Otherwise, we will probably get back lower just to this level, and afterwards we'll find out whether there'll be some bulls. The short squeeze just happened after this large amount of traders has bet that we are going lower, so there are lots of sellers at the 36 and 37k levels, betting we are not getting any further upwards, and they have surprised finally. So BTC has made a significant move higher, and right now we are touching this 41k level. I wouldn't take any bet from here just because there's a lot of uncertainty. This level have been tested twice or even 3 times. So unless you are a day trader who wants to just take a profit from the possibility of this movement and take this 6% possible 6%. Yeah, I wouldn't do this unless you are a scalper of the day trader. So right now the very bull case for the Bitcoin is after breaking this divergence line, turning up, and we can find that may be an also support. This line may be an also support that previously has been used as a resistance. So head and shoulders pattern that some traders have seen right here has been definitely denied, as just because this right shoulder has been a little bit too extended as to form a head and shoulders technical pattern, and right now this area is used probably as a rectangle that may bring a breakout or the final breakdown to the 24k levels. So in the media there were a lot of speculations who have really sent Bitcoin higher. Was it Amazon that last week advertised the job vacancy for a digital currency product lead, or was it Elon Musk that performed in a Bitcoin conference webinar talking about the advantages of cryptocurrency, or was it a Katie Wood or Jack Dorsey? But the truth is that none of them, just because these people, those events just became a catalyst to not make Bitcoin fall under the water, and just have stopped them from going under 30k, but the real catalyst became a price and the traders. There was so much accumulation of traders betting short that market just made a hoax of them, and just decided to get upwards. There was so low liquidity upwards that it was an obvious trade for market makers that decided to just put more cash over there and just to liquidate all of these Bitcoin positions yesterday and the day before. So just remember that this phenomena that what have happened yesterday and during the end of the previous week just proves a thesis that majority of traders is wrong. So whenever there is no clarity about a trend of a particular asset and the majority of traders are betting the specific direction of a future movement, there is nearly a high certainty that the price will make a turn around and just find the second side of the majority's view. So just bear in mind that you need to be cautious on the market and also watch the other traders are doing. And right now you have a trade idea, and let's talk about the proposition for today. There is Nokia Corporation sponsored. That is one of this February's meme stocks that turn out to be squeezed, but this also a stock with serious development and also some important business plans for the future. So let's look at the most important of them. Nokia launches blockchain-powered data marketplace for secure data trading and AI models. It's one of the latest, and also Nokia wins first China 5G contract. So there's lots of ongoing on with 5G at Nokia right now. That is a very hot topic that traders may consider as a possible buy. Otherwise, just look at the fundamentals such as at Finviz or Guru Focus. So when looking at the history of this company, we find that the history was much better than it's right now. Nokia was very hot back in about 10 years ago, 15 years ago. Right now it's a just percent of what's here. It's just a little drop in the ocean of how profitable this company was. However, we are assuming mostly right now the technical elements of the possible trade and the possible profit, because we are just taking over this long-term downtrend since 2014, and on the weekly chart we are just breaking out with a specifically high volume from this area of $5 and getting towards $6.5. When it comes to specialist analyst estimates, we can find these estimates nearly mostly higher than it's right now. It's average target price of 6.16, and we can find that the major resistance is at 6.50, where I would like to put my take profit a little bit below it, such as 6.48 for instance. So it's right now a possibility of gaining about 11 to 12%. Just remember, it's a low liquid stock, so don't put here maybe not more over than $5,000 or $10,000, just to not move the price, and obviously take a consideration of putting a stop loss that I would recommend to put just below this hammer this hammer candle at about 550. So when putting our trading board right now, it would be a possible gain of 11% in order to risk about 4.5%. So it's over 2 and 2 risk reward ratio that it's still fine when it comes to managing the risk. So yeah, there are some also claims that we are getting more and more attention when it comes to Nokia stock, and after those meme stocks have already been pumped twice, such as AMC or GME, so this one is getting more and more traction. So this 650 area should be out of any concerns. It will be accessible to reach. And remember that this trade stays valid as long as we are in this range of 5.7 and 5.9 US bucks. Otherwise, don't trade this regarding this recommendation. Finally, just remember to do your own research and decide yourself whether you want to put some bucks into this stock. Just remember to not risk more than 2% of your trading portfolio, just to not be truly wrecked, and stay careful on the stock market. And that's it for today. Thank you very much for watching, and see you tomorrow.